All right, welcome back for the episode of Carnivore Trades. Today is Thursday, November 16th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it here today. So markets here today, pretty much on the, I would say on the lighter side. So a very, very soft session across the board. And I don't mean soft as in weak. I just mean in terms of volume and action. So markets are fractionally lower here, and we talked about this earlier. 4,500 pin looks to be well in play for Opex. We did get jobless claims this morning, and again, they came in a little bit cooler than expected. Pretty much a Goldilocks number, though. What would spook the market is if we got above, say, 300,000, 350,000, and we're looking at 220 expected. That might be something that kind of shifts the narrative right here. But right now, it's a Goldilocks number, so the market is not going to be bothered by that. Additionally, going into kind of the holiday period, the government's not going to let any sort of serious data come out in front of the holidays. So just something to keep an eye on there, or at least keep in the back of your mind. But you can see here, again, even with the Goldilocks data, remember yesterday we talked about PPI. We got that outside bid, and that was the high of the day on the futures. This morning, 8:30, we got a little bit of a bid there on the jobless claims, and we kind of just chopped around. So the market up here, does seem to be pretty tired. Again, a lot of the these two data points, PPI and jobless claims, were pretty much priced in by CPI, right? I talked about that yesterday, and it seems to be the case so far. Now, there isn't really a ton of data out tomorrow, if I'm not mistaken, and next week will be a shortened trading week as well. So, yeah, we have housing starts and building permits. It's not anything crazy for tomorrow, but next week, it is a shortened week, so don't forget about that. So markets may go to sleep a little bit here, but right now, again, looks like a 4,500 pin. We could see now. The big question everyone wants to know is, when's this market going to pull back or consolidate? 'Cause we've had such a big move here off the lows. Literally a 10% move. We've talked about that ad nauseum the last couple of days, and we're fractionally lower here today. But right now, you do have a little bit, and let me use the spiders here. You do have some lower highs here. You got to take out this pivot, though, and you got to take out this pivot. That's really kind of what it comes down to. Now, tomorrow, I showed you the chart of expiration and how there's been kind of lots of weakness post expiration lately. We are fractionally lower today. That's nothing, though. Tomorrow, 9:30 a.m., that open, and then the SPX Opex, that will remove some supportive flow. So that's going to be something to watch there. And usually the Monday post Opex lately has ushered in more weakness. The only caveat, right, is that we have, a holiday shortened week next week. So there's not going to be, a lot of the big boys are going to be out of the office. And usually when that happens, volume is light, makes it hard for sellers to come in. It doesn't mean they can't. Again, this market is very stretched. But just keep that in mind here. Now, the downside really just starts on a break of this opening low. So that going back to Tuesday, 446.09. If you can get a decisive break of that, and then furthermore, 444, spot 44. I can never say that. You get through that, then we're into corrective mode. How would I do it? I would just gap it down on Monday. That's what I would do if I was looking at, to put my market maker hat on. I would leave an island up here. So you could, if you know your island pattern, it's a big gap up after a run. And then just kind of consolidation that ultimately fails. If you wanted to trap bulls, that's how I would do it. But again, until that happens, market is technically safe here. But again, I still do think that risk is to the downside here. At the very least, if that's not the case, then we're just going to chop around here and until these moving averages catch up. But again, markets with a pretty quiet day. I think the real action will be had tomorrow, and the weekly close will tell us a lot more. Triple Qs here, much of the same here, down 22 cents. Interesting, the Qs were a little bit on the weaker side this morning, and then we saw Microsoft, Google catch a bid. Amazon and Meta recovered pretty nicely as well. NVIDIA recovered. Apple started off and then faded. So showing a little bit of weakness there. But triple Qs, again, down just 5 basis points, basically flat. Same thing, same kind of island look into that double top. We'll see what we get tomorrow. And again, the weekly close will tell us a lot more. The IWM's the weak link again, so down 1.4. To be fair, it had a big gap up into the 200 moving average. That level worked out perfectly, as we talked about yesterday. And we went up and kissed it, kissed the 100, the 200, and now we're pulling back here. And look at where we're stalling out, right at this old good trend line, right? So we've had that in there marked for a reason. You know, we broke through it, chopped through it, went up there, rejected, basically gapped above it, hit this, and now we're back testing it on the downside. So we'll see if that gets broken. You break that low, you know, then the Russell's vulnerable down to, you know, probably the 170 in the gap fill there. But until then, again, just backing off here after a very short-term overbought condition. Dow here pulling back off the 350 handle again. Lots of weekly resistance up here. So red bar, pivot high. You sold off, you came back, that's where you sold from. So generally there's going to be sellers coming back in there. But again, the Dow's hanging in there okay, nothing terrible. Again, the downside starts with a break of 346.67. That is the low from Tuesday. So just be aware of that. Walmart obviously reporting earnings, that getting hit. There's lots of talk about recession with their earnings report. A lot of negativity in there, but again, the market's not going to care until those jobs numbers start to break down. But big move down there from Walmart. And to be fair, guys, Walmart was priced to perfection, right? It was at an all-time high going into earnings. And Target had a big move off of earnings yesterday, so that raised expectations even further. But in any case, I'm just mentioning this because, you know, Dow component. But Walmart down 8%. Dow, we'll just leave it at that for now. But was that 346.67? That's the big level there on the DIA. Anyways, SMH here up another 0.5%. That's still holding up okay. The SOX here, not above yesterday's high, so a little doji there is holding for now. Still some resistance here with this red bar. Again, just like the DIA, you retraced there, you came down, retraced again. So that's resistance. Again, downside starts with a break of this, and then you got 3,600. You got a gap fill, and you got 3,500 there on the SOX on the downside there. Cloud software, again, flat just like everything else. Little gap down, rally back, and it hasn't done anything since. This actually did break the low from the other day. I think, yeah, Palo Alto reported, and it came off the lows. Cisco also reporting as well. That also came off the lows, but take a look at the shot there. 12%, that's a big move for Cisco. Really nice level right here. Take a look at this weekly down move, weekly bearish inside bar, failed. There's generally going to be buyers there, and you're seeing a bounce right now. So nice pop there for Cisco off the lows, but still down pretty tremendously on the day. Transports on the weaker side again, down 1.2. Looking just like the Russell, right? Same thing. We talked about this yesterday, how those charts are so similar. Up move, pull back, right up into our level. Kind of, you know, 200 moving average in the same area as well. And now a pullback today, it's stalling out at the 50. Nothing terrible here. It's just overbought. If it starts to retrace, there's still some support around that 14.4 area, and, you know, even more around 14.2. And then you've got the even number all the way down here at the gap fill. So transport's just backing off there after a big run. Interest rates here, I'm just going to use the ZT. So 2-year here, again, holding up and still looking okay. I still think this can push up, you know, into this 101.30 area. You know what, I'm going to flip over here because this will probably get confusing for people. So there's the 2-year. So right into the 131 area would be 4.6 on the 2-year yield. Down move, rejecting that trend line. If this goes sideways, it's setting up for another push lower. 5-year, same thing. Can get down to 4.2. 10-year, 4.3, and then the 30-year, 4.42. Keep in mind that next week we have 10s and 20s, I believe on Tuesday. That's going to be an auction. That could pull liquidity out of the market. Yields could get a bid. So just be aware of that, and we're not going to have that supportive Opex flow anymore. So that could be, you know, if you're looking for a catalyst for a pullback, even during the low liquidity, like low volume Opex week, that could be it right there. So just keep an eye on that. And today, even with the data here, yield curve's not really doing a whole lot. So something definitely strange going on there in yield land, but they are pulling back, and until proven otherwise, I think they have one more retrace in them before getting kind of a bigger bounce there. All right, anyways, XHB, so that was up 0.1% here, nothing crazy. Pattern-wise, not terrible. If you just hold this inside bar, it can go higher. But again, just like everything else, the downside, you take that low out on a closing basis. You know, this is going back to 77.50. So just be aware of that. Very high on the hog right now, but if it consolidates, nothing to say it can't go higher. Same thing with VNQ. Holding this green bar low on the daily, below the 100. I like that you're back above the 50 now. If it consolidates, it can go higher. You guys know that the old saying. But a lot of resistance up here, right? Took about a month to break down from that area. So it's going to be hard to break through it after a couple of days. Needs to do more backing and filling there. Banks finally showed a little bit of weakness, although the XLF is up 8 cents. Looking more so at like the KRE, that was down 1.18. Again, we talked about the 200. That's going to be resistance. You're going to need to consolidate to get through that. You don't want to lose this green bar low on a closing basis. Again, this goes for everything across the board. KBWB down 59 basis points. Same kind of look there. And then the KBE. This is in better shape. I like that you're above those moving averages. But again, pivot or gap window, pivot high. Needs to flag, needs to consolidate. Don't want to see it lose that 38.17 area on a close. Broker dealers down nicely. So a little bit of a retrace there. Could go back to this trend line. And if it holds that, then you still have an inverse head and shoulders. And the target is literally an all-time high. So XBD still hanging in there okay, but down 1.16 on the day. All right, so now to something I got stopped out on today. So crude here down 4.75%. You guys know I'm still macro bearish on crude. Said that it needs to go down to those low 70s, but was looking for a dead cat bounce play. Had some seller exhaustion showing up on the 4-hour, and looks like I was just a little early on the trade. So we tried to get into it a little bit higher. And as you can see now, it's bouncing here. We were in around this area here. We got the dead cat bounce, never really got enough in the money. And then they kind of wiped it out from there. Is what it is. I'm not going to win on every trade here, but it is getting that bounce. So the seller exhaustion here in the short term starting to play out. You can see 4-hour kind of got a double bottom on the RSI versus the lower low. And so you're getting that dead cat bounce. However, this is coming down on volume. So respect that. I think ultimately it needs to go down into this 70 handle, maybe just a little bit lower. But that doesn't mean it won't bounce here in the short run and retest. I think it can at least retest 75, maybe 76. And if that holds, then it's headed lower. So just be aware of that on crude. But then down 4.7 on the day. So pretty good dump there for CL futures. Again, market is expecting a soft landing right now. But crude might be saying that's not so much the case. Again, the market's not going to care until the jobs data changes. XLE, slight lower low there, but holding that 82 handle. I do not like this for a swing anymore. I know I talked about 82 as a possible swing area. I don't like it because you've already came really close. You bounce, you put in a lower high. Just because it's bouncing here doesn't mean it'll continue. So this is now kind of minor support. It could easily just bounce up and just put in a bear flag. So just be aware of that. There's better levels that are lower on the XLE, but again, I'm just leaving this one alone. I've been leaving energy, well, at least XLE alone for the most part for quite a while here, and I plan to continue doing that. XOP, again, 200 moving averages minor. We've already essentially hit it. So remember a few weeks ago when everybody was like, oh, buy the 200 moving average right here, and I said, no, don't buy it because you already kissed it. And then look, you got one bounce and then it went right back down. So don't trust the 200 after you've already kissed it and you got a lower high. It is bouncing, yes, but again, there's nothing to say this don't bear flag and head lower here. So be careful with XOP there. OIH, nice slice into the 200. This is interesting because you get a falling wedge with the 200 there, and you got a slice below it. A lot of the time that can be a fake out. And I do like the OIH the best out of the three, as you guys know. Would I buy it here? No, probably not. If you're aggressive, you can and just put a stop below this low, on tomorrow's close. If you close below that on a weekly close, it's just your sign to get out. But if this does continue slicing through that, this is going down to 280, 290. That is major support, though, and I would be interested at that level, as I've explained already, based on the monthly time frame. Uranium here, CCJ, that's still going to 45. URNM, that can still go higher. I don't really see any issues with it. Moving average is starting to catch up on the weekly. Might need to do a little bit more consolidating, but nice little pattern there. That looks pretty good. Nat gas pulling back here. We finally got those inventory numbers. I think this needs to go down and test kind of like that 290 area, maybe this trend line. It certainly could trust that again, but right around 290, there's a lot of support right there horizontally. But nat gas pulling back in down 4. 1.25% on the day. Dollar index, so that getting a little dead cat bounce. And it is green on the day, but really not putting a ton of pressure on the market, obviously. It's not like it's mega green. I still think 103.50 and 103 specifically are way better support. If we got down there in the next day or two, I think the dollar would get a very good counter trend bounce up to 105, maybe even 105.50. But right now, if you were a dollar bull, what you wouldn't want to see is sideways. But you don't want to see another one of these candles, right? So you don't want to see a bearish inside bar, because that will adjust the target probably down to 103 as opposed to 103.50. But as of right now, still that 200 moving average will still be major. The 50 and 100 week moving averages are converging right at the same spot. That would still be major if we got down there in the next couple of days, I would think. But dollar getting a small bounce here, and again, it's fractionally higher, the market's fractionally lower, right? So let's not make a ton out of it. Gold here having a good day, although pulling back in off the highs. Still some resistance in this area here, around 2,000. It's going to be a psychological level. Obviously, again, I would prefer to see how the dollar reacts at those lower levels I just talked about before really making a big call on gold. But nice pullback pattern to that trend line, and it's held so far. So gold hanging in there okay. Silver continuing to pump up, although it is off the highs now. Good pattern. You could make a case that's an inverse. I don't love it because it's kind of not in a downtrend. I like head and shoulders should be a reversal pattern, not a continuation. And on the weekly, there's still a ton of resistance here with this red. So I think it needs to do a little bit more backing and filling. We'll check tomorrow's close. Above 23.93 would be a big positive for silver. But it is pulling in here. We'll see what kind of pattern it puts in. But decent pop there for silver futures. Platinum stalling out at those moving averages there. Watching that one closely for a higher low attempt or pattern, or possible one more double bottom even. And palladium, again, still into the accumulation zone. This could still have one more low. I wouldn't rule it out as a very thin metal. Let's just extend this out. Maybe it goes down to this trend line. This isn't perfect, Maybe it goes down to this trend line one more time. But I still think this is an accumulation zone for long-term holding, not necessarily swinging or day trading, but longer-term level here for palladium is getting interesting. Copper, guess what? Pulled right back off the 100. So this trend line has been king since, the beginning of October. Look at that. 1, 2, 3 hits right here, and we're pulling back again. We'll see tomorrow. Can they close it back above? If they do, you still got these moving averages. You got this red bar, so it's not really even, like I said yesterday, if you get about 376 on a weekly close, all right, then I become short-term bullish here. But this is still not a great pattern, and again, the monthly is not a great pattern either. Down, chop, so this thing can go lower. Just be aware of that. And you guys know my price targets, they haven't changed. I said 370 for the better part of the entire year. We got there, and 340 is kind of the next level. So we'll have to evaluate it when it gets there. Bitcoin reversing pretty sharply here. A lot of volatility. Again, I think there's a lot of shaking and baking going on here. Shakeouts, fakeouts. It's all about the ETF news, but nice reversal. I want to caution you guys here, and I've done that before, but they that Bollinger Band on the daily, but that's not even at the monthly. It tried to pump up again yesterday, and guess what? That monthly, I showed you guys this last week, it's saying no right now. So the algos are coming in and pulling this in off that Bollinger Band. Just be aware of that. So you don't want to see it take out these lows here and these pivots. If it does, it has downside. Just be aware of that. And usually, people aren't going to want to hear this, but usually the way it happens is when you reject like this, it goes to the 20 moving average. Just FYI. It doesn't always happen. Sometimes you just hold up, and then that actually turns bullish. But a lot of the time, it does go back down to the 20 MA. So again, it's probably going to piss a lot of people off, but I'm just reporting what I see. And that's usually the way that it goes and how I tend to trade it. I have no position in it. Just throwing it out there. So exactly, I have no reason to make this up. Anyways, spiders here, down just 5 cents right now. About 30 minutes left. We're not going to see anything happen. If we do pump up, it'll be to 45.10. That's it. And then tomorrow, we'll see. Tomorrow's close will tell us a lot more as far as what's going to happen next week. Remember, it is a shortened week, so it's a bit of a wild card there. As we know, the markets are pretty overbought here. And we'll see if we get some mean reversion or not. It's still very extended there from that 20 moving average. And this pivot high is still holding for now. So again, that weekly close will tell us a lot more. Anyways, guys, gonna wrap up here. You guys take care. Come find me on carnivoretrades.com. Talk to you guys all tomorrow.